everyone. As we do every month, we are going to share with you the main insights that can be extracted from our digital top-down methodology. Our method consists of evaluating the attractiveness of European equities with regard to four complementary pillars of analysis. The first pillar relates to the economic momentum in Europe. It recovered in January and holds a phase of almost uninterrupted decline since last summer, due to the base effects that have become progressively less favorable. This is typical of a mid-cycle economic recovery. The forthcoming development of the health situation will shape the future direction of our indicator, and we can be optimistic in this respect. It is also worth noting that the equity market, after the decline in January, is again moving in line with the economic momentum. The second pillar concerns the ECB's monetary policy. The latter is very accommodating, and the spectacular rise in inflation is lowering real rates and is facilitating the spread of a monetary policy that will be maintained in 2022, according to the comments of Mrs. Lagarde in November and confirmed since. The complex health situation and the probable easing of inflation in the coming months will be highlighted to justify the maintenance of the accommodation in 2022. Monetary conditions are not without consequences for the third pillar of our analysis, which deals with European market valuations. In a context where interest rates are very low or even negative, the notion of valuation becomes crucial. The risk premium of the European equity market stands at 6.6%. This is an unusually generous level compared to the historical average of 5%, comparable to the levels measured in October 2020. Then, the European indices have risen by almost 50%. A return of the risk premium to its historical average could lead to 15 to 20% re-rating of the European equity market, thanks in particular to the value segment, which remains very undervalued compared to the historical standards, despite the strong outperformance of the equity style in January. In addition, European earnings growth remains on track and is constantly being revised upwards. Earnings for 2022 were raised by 2% during the month of January by the consensus of analysts, now expected to be 25% above their pre-COVID crisis levels and 7% of their 2021 levels. Finally, the fourth pillar addresses the behavioral aspect. Long-term dynamics are bullish, as most international equity indices, with the exception of Asian markets, are above their 200-day moving average. The European indices have also powerful technical support, corresponding to the historical highs of 2000 and 2007, which are about 7% below current levels. In conclusion, the overall context remains favorable for European equities and their most cyclical components in the medium term. They remain strategically unavoidable in an asset allocation. Economic momentum remains expansionary. The central banks continue to flood the financial system with liquidity, keeping long rates low, which justifies a deep revaluation of the indices and the most value-oriented components. Finally, the market dynamic remains bullish. Short-term dimension is more neutral. Strong rally observed since the March 2020 lows. Thank you, and see you next month for a new monthly video by Shaheen Capital.